Hello and welcome to FinextraTV. I'm Hannah Wallace, and joining me in the studio today is Richard Callis, Client Solution Director, Retail Banking at GFT, and Simon Thompson, Head of Artificial Intelligence, Machine Learning and Data Science at GFT. Hello to the both of you. Thank you very much for joining us.
Good afternoon.
Really good to have you on, especially as we're speaking off the back of GFT's latest Banking Disruption Index, which explores customer sentiments around digital banking, and this one's got a specific focus on artificial intelligence. And I know it unpacks a lot, but what I'm interested to hear about are the key findings. So Richard, could you start us off?
For sure. So the Banking Disruption Index we launched in 2022. We wanted a barometer of customer sentiment around the banks and also the digital services and offerings of the banks. And the last Banking Disruption Index we did was around consumer sentiment and understanding when spending money overseas or using cards overseas. And we got a sense of the frustration and the lack of understanding around spending fees and charges. And we could understand then how that varied across the traditional banks and the neobanks. The survey of the respondent surveys are based across a large demographic. They're customers of both traditional banks and neobanks, so that allows us to do a comparison between the services offered by both the different types of banks. The Disruption Index, we run it quarterly, and each quarter we can start getting a sense as to how that sentiment has shifted, changed, and we can add to that specific focus. So, as I say, we looked at the overseas spending and charges, and this quarter we're looking at AI and the use of this innovative technology across the banking sector and how that can benefit customers, and whether there are apprehensions around it and understanding what those apprehensions are and how we might tackle those challenges. And in this quarter's index, we received responders saying 61% were actually happy for their banks to start leveraging AI to their benefit. And that actually increased to around 13% that said they were excited about use of AI for their benefit in their financial services.
Well, thanks for setting the scene, and it's really interesting because AI is such a big topic, isn't it? Interesting to watch how sentiments change around that as well. And Simon, perhaps we could get the technology perspective then, because how are you seeing the use of AI in banks today?
We're seeing a lot of adoption around fraud. We're seeing a lot of adoption around monitoring what's going on. The regulators are requiring a great deal of forensic inspection of the activities at banks. And because of that regulatory pressure, in order to manage the cost of responding to that, the banks are having to turn to automation because using just doing it without automation, without AI, is prohibitively expensive. So we're seeing a lot of that. We're seeing a lot of adoption around customer service as well. So there, what we're seeing is that people are trying to use automation to focus effort and investment on the customers who are most in need and that they can make the biggest difference with. And basically by automating routine processes, things that take up a lot of time, take up a lot of bandwidth from the customer service agents, but if we can automate that away, then the humans can focus down on what the customers really need them to help them with.
Sure. Well, there's still a way to go, but there is a lot of progress that's been made. So, Richard, you touched on some of the apprehension around banks using artificial intelligence. Perhaps you could talk us through that. Why is that, do you think?
So there's obviously a lack of knowledge and understanding around how AI actually works and how it applies. And also if you look at media coverage of artificial intelligence, and especially if you look at Hollywood, for example, it's always portrayed as this force of evil. So that does tend to influence the sentiment of the general public around the use of AI and how it might make the human obsolete, for example, or worse, you then have the sort of apocalyptic visions of AI suddenly hunting down humanity, whereas actually the reality is somewhat less exciting outside of the data science community, and therefore, it can be trusted, and consumer sentiment does say that the younger demographic, for example, are more embracing of the technology and happy for technology to be used for their benefit, and AI is no exception to that technology. But if we start looking at older demographics, then we start having higher percentages of like over 55s, for example. Like I think 38% of the responders said they were nervous or unhappy for AI to be used, and they didn't trust it. And I think that all comes down to a lack of understanding, and that when you bring the customer on the journey and they understand the technology, why it's being used, how it's benefiting them, then I think they're more open and embracing, especially when we start talking about areas of fraud, so you're using it to protect them.
Yeah, I think the challenge that the banks face is twofold. I think first of all to be transparent about it and communicate about it and listen to what customers are saying, as well as go out there and do things, but you need to include the customers in the conversation. But I think there is a real challenge about, first of all, the way that AI is described and portrayed to people, but also the genuine concerns that there are, and that I think even the more sophisticated customers are looking at genuine concerns such as marginalisation and bias, exploitation of their data.
Yeah.
We've seen a lot of big companies are very free with exploiting people's data as much as they can, and I think therefore we're seeing there's a sophisticated range of concerns that customers have got, and that means that banks are going to have to be sophisticated about how they respond to that.
Some good advice to lead off from there. So taking all of that into account then, what do you think and how do you see the use of artificial intelligence changing in the next sort of 5 years, say, and what are some of those opportunities that can be made the most of as well?
I think we're going to start seeing a proliferation of the technology across the sector. Banks need to be very conscious as to when they leverage artificial intelligence. I think they also have to put the consumer and the customer as the primary focus. And I think if it's considered purely on a cost reduction play to automate internal processes, that might actually alienate their customer base. There's also the other consideration, of course, around even if you're looking at the customer service and the customer experience, AI has huge benefits in being able to facilitate faster communication, faster resolution, but actually it can't replace the human. It's very important from a customer perspective to have that knowledge that there is always human intervention as and when it's required.
Yeah, I mean, I think it's a point well made. Cost saving is one big business benefit, but cycle time, being able to get back to customers quicker is hugely important, and it's going to help you drive up revenue, be more competitive, provide a better experience for customers. I think in terms of the technology, we don't have a crystal ball. We don't know what's coming next. We have seen a step change of capability in the last 2 years, but we're still settling down on what the applications of that new technology are. There's been a lot of confusion about how we can use the latest generative technologies, what they will actually do for us, and that's boiling down to being able to process natural language better and produce natural language better, and that's very useful in some applications, maybe less useful in others. The point is that we already had a portfolio of technology that we were working to apply across banks. Now we've got some more, perhaps there'll be even more developments in the future, we can hope. A lot of money is being spent anyway. And so there's a lot of value for banks to get from trying to exploit this technology, which I think all banks know.
Sure.
Yeah. And I think it's also important that in order for AI to be successful and benefit, it needs to be trustworthy. And in order to make it trustworthy, it's really important that the people implementing it for you are actually experienced practitioners who thoroughly understand the technology and can actually avoid some of the mistakes where AI can misinterpret and provide untrustworthy responses.
Yeah, I think the ethical practice is critical. I think all banks are going to have to work ethical practices into their procurement pipelines for AI ML projects, but also in their implementation pipelines and their governance structures. I think one of the things that's really crucial is around trustworthiness as well, which is the data infrastructures, because without that well-managed, performative, capable data infrastructure, there are going to be problems with any AI implementations that you build. So having that in place is going to be pretty critical for every bank going forward.
Yeah, and for sure the opportunities are very exciting. No doubt it is going to change all of our lives forever. Once it's in, rather than hunting and killing us, it's just going to make our lives ever easier.
Well, exactly. There is some way to go, but I think you've done well to highlight the opportunities as well. Safe to say, watch this space. Richard, Simon, thank you so much for sharing your insights on this. And I urge anyone listening in to go to the Banking Disruption Index to learn more. But thank you very much, and speak further down the line.
Thank you.